You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 2nd day of August 2018. Well, this month is off to a fine start, is it not? Apple just hit $1 trillion in value. 1 trillion. A trillion. I know. It blows your mind. You can't even comprehend what a trillion is. I'm gonna mess around and just show you. I've done this before. What does a trillion look like? I know many of you have seen this on our blog years ago. I believe this is the one. Okay, yeah, this is it. Perfect. Wow. Okay, what does a trillion look like? All this talk about stimulus packages, bailouts, blah blah. $1 billion, $100 billion, $800 billion, or $1 trillion. Now, Apple hit $1 trillion today. What does that look like? Well, we'll start with the $100 bill. Most of us are familiar with that. It is the most desired piece of currency in the world. A packet of $100 bills, that's 100 hundreds, is less than a half-inch thick, and there's 10 grand. You already did the math. Fits in your pocket easily and is more than enough for a week or two of shamefully decadent fun. Believe it or not, this next little pile is $1 million. Right there. That's 100 packets of $10,000. That's what he's got. You can stuff that in a grocery bag and walk around with it. $1 million. While a measly 1 million looked a little unimpressive, here's 100 million. That's a little more respectable, and it fits neatly on a standard pallet. Now, you're going to talk about some real walking around money. Here's $1 billion. B as in boy. Let's see. Warren Buffett has 80 of these. Jeff Bezos has 150 of these. All this, $1 billion. Okay, you with me? Now, this is 100 million. That's a million. That's 100 million. That's $1 billion. Wait for it. Now I'm going to show you what $1 trillion really looks like. And this is what Apple is worth today. Remember, these are $100 bills. Wait for it. Wait for it. Ladies and gentlemen, I give you $1 trillion. And there's our little guy. You might notice those pallets are double stacked. And remember, those are $100 bills. Now, put it all in perspective. Here's the guy. Here's the money. The guy, the money. The guy, the money. When you jump to $1 trillion, whoo, baby. That's a whole lot of $100 bills. See what I'm saying? Okay. Hey, welcome to the show. Thanks for tuning in. So glad you're here. If you're returning, welcome back. If you're here for the very first time, let me extend a special welcome to you. We're so glad that you have joined us. I have a chart up of the S&P 500 Emini Futures. I did have a chart up of $1 trillion. Oh, a reasonable facsimile thereof. If you can't see the chart, go to the home page, CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and you only have to register once per month. That's it. You'll have one-click access to the show, to the charts, to the chat box, to the discussion, all month long. We dual stream over on YouTube at youtube.com/CFRN/live. If you bookmark that page, you'll always have a fallback one-click access in case something were to happen to the go-to software. All right. Started to tell you about this yesterday, and I didn't get a chance. Tossed and turned all night over it. It seems that ad executives really know how to reach the kids these days. Just launch a coin. At least that's what seems to be their thinking. To celebrate the 50th anniversary of the Big Mac, McDonald's has announced the McCoin. M-A-C-C-O-I-N. McCoin. A limited edition global currency backed by the Big Mac. If this type of Bitcoin mimicking publicity stunt sounds familiar, you must be thinking about the Bakecoin, which Oscar Mayer launched just a few months ago as the first ever cryptocurrency backed by bacon. Now, if I'm not mistaken, Burger King already pulled this in Russia and somehow got in trouble. Beginning today, lunchtime, August 2nd, customers can receive a McCoin with the purchase of a Big Mac at 14,000 participating restaurants across the U.S. starting on August 3rd through 2018, customers can redeem their McCoin for a free Big Mac at participating McDonald's restaurants in the U.S. and in more than 50 participating countries. More than 6.2 million McCoins, Mac coins, will be distributed globally in over 50 countries while supplies last. The Binance Exchange has announced it has completed the acquisition of Trust Wallet in an effort to provide a better service for its users. Trust is an open source mobile wallet app launched in November of last year that supports over 20,000 different Ethereum-based tokens, ERC20, ERC223, and ERC721. The exchange explained that the acquisition will add an on-chain mobile wallet to its list of services with other future integration possibilities, and that the Trust Wallet team will retain the autonomy to develop the core product. As a technology-driven company, Binance's acquisition of Trust Wallet shows the importance of a secure wallet technology for the future development of cryptocurrency as a whole. As Binance's first public acquisition, they state that they hope to continue providing our users with improved security, services, support. If you're in the UK and a Coinbase customer, you can now buy crypto with the pound, the British pound. US-based crypto exchange Coinbase announced this week that its UK customers will be able to buy cryptocurrencies with the pound. This is good news for British residents who until recently had to maintain fiat funds in Europe and put up with slower purchasing times and foreign exchange fees. Now they can take advantage of same-day payments and withdrawals. That's from the CEO of Coinbase. He went on to say, UK banks have been conservative in terms of working with crypto businesses, and we're proud to be one of the first companies to get access to domestic banking. Now, yesterday the company said it will begin adding the pound trading pairs such as GBP BTC, GBP ETH in the coming weeks. Coinbase expects that the new offering will also be popular with professional traders, as the pairs can be used to bet on currency movements in the global foreign exchange markets. The San Francisco, California-based trading platform currently supports the following cryptos: BTC, BCH, LTC, and ETH. Recently, the exchange announced it is exploring the addition of several new assets: Cardano, Stellar, Zcash, and Ox. So there you have it, your bit of crypto news for the day. Let's take a look at the numbers around the world. Michael's back today. Okay, so in just a moment, Michael's going to come give us a recap of what happened in the live training room. Then John will join us for a lively discussion. And I don't know that I mentioned it, but Dr. Tom, we have switched his Monday to Thursday. So instead of a regular Monday guest, he's now a regular Thursday guest. And he'll be joining us at the top of the hour, 1 p.m. Eastern. So be sure and stick around for that. All right, let's go over the numbers. These are cash markets around the world. We'll get to the futures shortly. Currently, the Dow is down 73 points. NASDAQ is up 59. S&P 500 is up 5. And the Russell 2000 is up 3. No real movers or shakers. And the Dow is the only thing in the red. Now, is it leading the way to the downside as it has done? I commented on that in the beta earlier in the week. In our commodity basket, crude oil up $1.27. That's almost 2%, trading $68.93 last. Gold down $4.70, trading $12.22.90 last. The Asian markets, Nikkei lost 234 points today, a little over 1%. Shanghai was down 57 points at the close. And Hang Seng lost well over 2%. At the close, the Hang Seng was down 626 points. Now remember, John was talking about this right here, what we're seeing today in the Chinese markets yesterday. Last but not least, the close in Europe, the FTSE was down 76 points, that's 1%. The DAX was down 190 points, which is, for the DAX, 1.5%. And the CAC was down 37 points, just a little over half of 1%. So a very red day in Asia and a very red day in the European markets. And in the U.S., we've got 3 out of 4 in the green, but the Dow is down even a little more at this point, a couple of ticks down. All right, so there you have it. Apple hits $1 trillion. Asia's in the tank. Europe's in the tank. We're doing okay. And here's Michael.
Good afternoon,
Hey.
everyone. Hey, I'm here. Thank the Lord. Here being back home. and here, back home with you. It is, yeah.
Did you see that picture of $1 trillion I showed?
I didn't see the picture of $1 trillion, but I did go and look at that webpage that you, the Logic one, that you had sent to me. That looks pretty cool.
Well, thanks. Yeah, here. Thank you. Here it is.
Yeah, you still have the charts.
Now this is $100. This is a $100 bill.
Yes, it is.
This is $10,000.
That's
100 $100 bills.
Yep.
Now that little pile right there, that's $1 million. 100 packets of 10,000.
Okay.
Well, this right here is 100 million.
It's
A lot bigger than $1 million. Now here's $1 billion. That's some serious walking around money.
That is.
But he's still taller than it, right? Yeah.
Oh yeah.
Here comes your trillion. Double stack pallets, and there's our guy.
And there's the guy. He's smaller than every double stack.
Apple hit the $1 trillion mark today. First company ever.
Wow. That is.
Yep.
That's a lot of $100 bills right there.
Now, I wonder if anyone's ever tried to compute Solomon's wealth. I wonder if in the days of shekels or whatever they were using at the time, I wonder what his net worth was worth.
Net worth was worth compared to current.
Yeah. Maybe he was the
valuation.
first trillionaire. I don't know.
It's possible.
Maybe he had more rubies than Jeff Bezos. I don't know. Jeff Bezos has $150 billion now.
150 billion.
You know, the whole.
So what do you do with all that money?
To
do you do with all
whom
that?
much is given, much is required. I don't know. It's a lot of pressure, I think. I mean, you could literally change the world, save the world, paint the world.
And that's more than several countries'
Yeah.
GDP.
Exactly. Yeah. So.
Yeah.
That's a heavy thought. Okay.
It is.
Have you grabbed the screens yet?
I have not yet.
Okay.
We were just looking at the money. I'll grab them now, though.
Okay.
Here, I got them. And there's a big cat in here. So if you hear some background noise, you'll understand why. Okay.
I thought we were dog people, but I guess we're cat people now.
Well, we have 5 cats and 1 dog.
Yeah.
The dog's bigger than all the cats put together, though.
Okay. So, somehow or other, oh, it just did it again. As soon as I started to say that the screen's been behaving pretty well lately, the second I said it.
You didn't even say it. You thought about saying it.
It's just weird.
You said somehow.
Yeah.
Now, I had resized my thing.
That might have, I don't know, maybe that had something to do with it.
I don't know if that triggered it. We'll have to try it. I mean, we can go back and forth if you want, and I can resize and see if it changes things.
Well, actually, I mean, it comes up fine now. There's no problem.
Okay.
Yeah. And the last time Garrett was with us, it came up okay on his. So I don't know. At first it didn't, but I somehow managed to get it to work. So anyhow, let me hit mute so you can do your thing.
Okay.
A reminder, guys, John will be with us here shortly when Michael's done, and also Dr. Tom joins us at the top of the hour, and also there were Concierge Trade Alerts last night, not to mention Beta, and we'll go over those Concierge at some point before we leave today. Take it away.
Excellent. Excellent. All right. Here we go. Here we go. Good afternoon, everyone. Today is Thursday, the 2nd day of August, 2018. Let's see. If you have not taken a free trial with us, go to the home page at CFRN.net, and right here where it says 5-day free trial, click on this right here where it says apply.cfrn.net, or you can scroll down here and hit this, and then that's going to bring you to a page where you need to hit another link, or this, same thing. Eventually, it's going to bring you to this page right here, where all we ask for is your email, your first name, how you found us, and hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, well, we don't know that you took a free trial. Okay, so you must click on that confirmation link. Okay. Look, CT Global. There's our coin. Isn't it pretty? All right. Hang on a sec. I must find this. All right. It's going to say working here in a second. There it is, working. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is my first day of trading in the current month, so it's not going to show much for the current month. Oops, wait, that's nowhere near the bottom. There we go. All right, so it's not going to say much for the current month, but anyway, today is the 2nd day of August, 2018. We made 4 ticks in the euro, 4 ticks in crude, 7 ticks in gold. That puts us at plus 135. Today it took 57 minutes and 7 trades to get to the goal for the day. At that point, we were up $5 a contract, and we took a total of 8 trade opportunities today. I missed some today too. I know you might find that shocking that I missed a couple. Joan says we don't have YouTube streaming right now. Well, she said that 10 minutes ago. Uh-oh, I think Alex. Anyway. So I made $135 today. It's our first day this month, plus 135. On the year now, we're at 21,233. That's over 139 days, averaging 152 per day. 152 per day. Okay, that's where we stand on the day, on the month, and on the year. On the day, on the month, and on the year. Now, let's go take a look at what actually transpired here. We did do a little trading here in gold. In the pre-market, there was some nice trades right here in this leg up, and there was one trade here in the leg down. We missed the first one right here at 933. We didn't get filled on it, and I think I had to go get my glasses, which were out in my truck, and blah blah blah. Over here, there was a shorting opportunity right there, but it would have been a momentum short going into support, so that's why we left that alone. But we did grab this one because it was an entry above the MA1, and we picked up 4 ticks on that. And we grabbed this one over here, and we picked up 3 more ticks on that. And since the end of the room, gold has done absolutely nothing. Nothing, hardly even any bars. The euro. Well, if we start over here, you can see the slingshot's all messed up. It's not giving us any trades here. Finally, it gave us a trade in here, and we took it, and we got 4 ticks profit on that trade. It gave another momentum short right here that I missed, and looks like it gave another momentum short here that I missed. and a long right here toward the end of the session that I also missed. So I missed that one, and that one. Now, that one gave a little bit of profit. That one gave a little bit of profit. And this one looks like you would have gotten out break even right there. Okay, since then, there is nothing on the euro. Okay, on crude oil, let's see. We started out the day with a stop out here on crude. It eventually went down, but it stopped us out over here, right at the beginning. Okay, right here on crude, we picked up 10 ticks. So we were -8 coming into this trade. We picked up 10 right there to put us at +2. And then we picked up 2 more there to put us at +4. Okay, right there we had a break even. We missed that long, which would have been a profitable trade. We had a break even there, had a break even there. And then we got into the break in here. It got choppy and we weren't doing anything. And then I started doing the spreadsheet and it started going up, giving long trades. It was one there, one there, one there, one there. Actually, no, the slingshot got all messed up. So sorry, it was only one there. Changed directions and started giving shorting opportunities. It would have been one right here. Okay, and changed directions again and didn't give anything. And that was crude. Now the ES has been grinding, but it's been given trade setups. Okay, you see it started out here right inside this weekly trading zone. Now, I'm pretty sure that's weekly trading zone for this week. But we had a break-even trade there. We missed that one. We missed that one. And this one. This was during the break. It gave this long right here. Then it gave another one right there. And another one right there during the break. Then it changed directions. And now it's going up into the high of the day and one more weekly trading zone right up above here. So that's what's going on with the ES. And that was it. That was our morning. So we're +4 on crude, +4 on the euro, and +7 on gold. Okay, that's $135 a contract. We started out -8 on crude, but it all worked out. Today took 57 minutes and 7 trades to get to the goal for the day. At that point, we're up $105, and we took a total of 8 trade opportunities. 135 on the first day of the month, the first trading day of the month for me. And on the year now, we are at 21,233. That's over 139 trading days, averaging 152 per day. Again, if you can read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. If you have not taken our free trial, go to the home page, and right over here on the side, it says apply.cfrn.net. If you click on that, or click on this, or this, you will then get access. No, actually, you'll be kicked to this page. Where all we ask for is your email, your first name, and how you found us. Hit the submit button, and then you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that confirmation link, we don't know that you took the free trial. So you must click the confirmation link. All right? All right. And with that, we can pass it back out to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are prepared.
Almost. We got
okay.
2 minutes.
Okay. Let me just see if John's in here. John is in here. Okay, so John's right on time this morning.
He is? Okay.
Yes.
So recap.
Yes,
the recap.
Today it took 57 minutes, 7 trades to get to the goal for the day. We started out with a stop out. That's why it took 7 trades. Started out with a stop out, then we had break even, +10. Then other markets, we started to get a couple of trades in. So that's all good stuff.
Okay.
John is in here.
Very good. Yeah, you can, if you want to open up his mic, that'll be.
Okay, yeah, I was just going through it.
We've got, did you remind everybody about the workshop tonight?
Yeah, there's a partners meeting tonight, 9 p.m. Eastern. I am exhausted, everyone, so get your questions in early so we can go through them and make sure everybody gets their questions answered. Okay. Yeah, I had flight delays and everything else. I didn't get home until 1:40 in the morning last night. Driving in the rain. Yeah.
Okay. Well, thanks very much, Michael.
Okay, John's mic is open
Hey,
right
John.
now.
Welcome to the show.
Hello. Thanks for the invite. Well, I suppose we were to start off by saying Apple hit $1 trillion a short while ago.
Oh, I forgot to take the screens back from Michael. Let me grab them real quick. Okay, almost there. And I was showing everyone else. I've shown everyone else. I might as well show you if I never showed it to you in the past. Oh, it's a little surprise. Can you see my screen?
Mm-hmm.
All right. There's a $100 bill.
Mm-hmm.
There's 10 grand. It's $100 bills. That's $1 million. It's 100 packets of 10,000 in each packet. Now, this is pretty impressive.
That's 100 million.
100 million. Yep. Now here's $1 billion. That's serious walking around money. And here's the guy. Now we're going to roll out $1 trillion. And there's the guy. It's staggering the difference between, the greatest difference by far is between the billion and the trillion. I mean, it's just staggering.
Put $1 billion back for a minute.
Billion is right there.
Yeah, so $1 billion is 8 of those things. So go back to the other one again.
Yeah, it's like one of those standard pallets. Like
Yeah. So $1 million is a pallet. No, wait a minute. 100 million is a pallet.
Yeah,
so $1 billion is 10 pallets.
The 1 million, you could stuff that in a grocery bag and walk around with it. You got 100.
It's about time they issued, $1,000 bills, $500 bills. Get on with it. It's,
what's the largest currency the United States has ever?
1,000, I think, or maybe 10,000. I think they might have had a 10,000 bill one time.
I'm going to put this link in the chat box for you guys in case you have somebody you want to share when they start talking about $1 trillion around the dinner table tonight because of Apple. You can say, I actually know what it looks like.
I think what happened here yesterday and overnight is, we've had a pretty much 5, 6, 7% month on July, and when you come into a new month, there's a little bit of a setback, which I got this morning. So that down test, a couple of 100 points on the Dow, nearly 100 points on the 60, 70 points on the NASDAQ was a bit of a test, and that got swept aside pretty rapidly this morning, right off the open. We actually did a pretty good job. We we didn't get quite the high last night, but we were about 5 points off it, I think, and it did rally up. I saw it break and then rallied up a bit. We sold that rally, basically stayed short all night, covered it just around the open, and we've just, basically been long. We traded in and out a couple of times on the way up, took an extra 10 points or so twice on the NASDAQ, and the Dow probably 50 points or so, 50, 70 points on that big pullback on the Dow. Dow is lagging today, but the S&P has certainly, this is a pretty extraordinary rebound by any measure. It's a kind of a mini version of what happened on August the 24th, 2015, when the Dow opened down 1,000. Dow opens down nearly 200 today and makes this snapback. This is a pretty powerful rally. It's sort of like, yeah, all of the issues this morning kind of, sold off of the open, found a traction, found a footing, and then turned, and basically have been going up pretty relentlessly, since the market opened. So I think what I think we're reading from this is, as I've said in the last few days, we would get a Hang on, I gotta take. I gotta take
Go
the.
ahead. No problem. All right, guys. Last night on the Concierge Trade Alerts, just we'll talk about the S&P here for a second. The email, which did go out last night. Yay. Consider selling 2801. Obviously, my target is going to be this weekly zone because I expect it to be good support until it isn't. And so, a little rounding bottom there. The wicks. Boom, boom, boom. And as we start to move higher, target is the zone overhead. And so, we had a 10-point drop, $50 per point. It's $500 per contract traded. That's if you got out at the exact swing low. But you didn't. Nobody ever does. Okay? We trail a stop. We know we're going to leave something on the table, and we're okay with that. And in a situation like this, if you simply want to trade it down to the area that you think will be good support in a short trade, can you just set your hard target at 96? Sure. If you did that, then we're talking 5 points instead of 10. In the same email last night, we said, also, if the opportunity presents, consider buying the S&P at 28.19. We just triggered coming into the show at 28.19. The target overhead, 24.25. So if we get to 24, that'll be 5 points. So far, we've made it up to 22.5. So far, we got 3.5 points there. Now, I know that the market turned here and here, but keep in mind, zones are an area, okay? Like fibs. Now, I know that fibs put an exact number on your chart, just as the zones define an exact number. However, although we can get very comfortable with this, okay, and this, sometimes we come up a couple points shy or a couple ticks shy of actually hitting the zone. Why? Because zones are an area. Okay, just remember that, and it'll serve you well as you're trading and setting your targets and using the zones. All that jazz. Okay. All right. So that's what happened on the S&P. Let's look at the Dow. And I'm assuming John's going to be back. All right. What was the low here? Oh, be still my beating heart. We missed the lowest weekly zone. Yep. Swing and a miss. That's okay. Last night's Concierge Trade Alert on the Dow said to consider selling 25,300. 25,300. That's going to be right about there. A little lower. 25,300. There we go. Pretty close. All right. Now, the last night trade alerts got out at 9:25. If I've got that correct, 9:25. Right about is during this 30-minute candle here. Yeah. And so, let me write it in. Hey, welcome back.
Okay, sorry, I might have to go back out for a short while soon. But look, a couple of things that are going on today. So this is you know, it really has legs, this market. What I was trying to say is we have managed, you know, remember I did kind of remind people that we are in a kind of a new world in a 4.1% economy. And the, you know, it's just, it in the same way as, just like this guy said days ago, you know, Facebook, in fact, this, I'll give you an example, this Google, right? Google just came out with this thing overnight, and about a censored version of, you know, this is holier than thou Google, okay? The one that said, you know, that wouldn't.
Evil? Is that how it went?
Right, yeah. Sort of has come out, has finally relented, and it's coming out with a censored version of Google for the Chinese market. That took $4 in value off Alibaba overnight. So, I mean, that's a pretty big deal, actually. And let's see what happens to Baidu. Probably Baidu got clipped as well. Yeah, Baidu's down. Oh no, Baidu's up a little bit today, but it was down yesterday. So, but Google opening up, I mean, listen, at the end of the day, I mean, Google is like 100 times better than Baidu, and certainly massively in terms of global reach and everything. There's no contest.
I remember you were all over Baidu way back in like 2006.
Well, I was I mean, look why. Look why. Because if you go back and look at the history, look at where I mean, it's gone from $5 to 250. Yeah. So it's a huge. And I probably was saying that it was like, you know, I think I probably remember what I said back then roughly, which was, you know, Google, all of these big winners, including Apple, have all stumbled, you know, in their early days. You know, I'm telling you, you know, Bill Gates got the door slammed in his face a few times before he started to make progress. He got very lucky, obviously, with IBM and the whole history of what's happened since. But Dell had a problem, Microsoft had a problem, Intel had a problem, Apple had big problems, you know, went under, and Amazon had problems. So Amazon had huge problems. Yeah, in fact, Amazon was a laughing stock. Amazon was a laughing, right. Was a fodder of late night stand-up comedians for the longest time. Right, and Facebook, you know, had a problem in the sense that it went public at 40, 45, and all the way down to 18. Then it turned and has never looked back until last week or two. Baidu did the same. It opened very erratically in the IPO, went down to from 15 to 5, and then it went up, and then it suffered a bit in 2009, came back to 10, and since then it's really gone way higher. But actually, I can tell you right now, I got kind of an ugly looking chart on Baidu. Pretty possible huge sell signal developing on Baidu here. And given the way the Chinese, I mean, look, everything else is up today, but China. Hard today. I commented on that when I went over the numbers from the Chinese market. China's in trouble. You know, 18% of their revenue is going to interest right now, and that's rising. And the Chinese economy could be the millstone potentially around Trump's neck, in the sense that you know, Trump could be doing everything, you know, for the U.S. economy, America first, but it might get dragged down by the rest of the world if China, you know, capitulates. Listen, can they do another couple of years, 2 or 3 years on borrowed time? Probably. They might just be able to get by. They've started this stimulus program now. You know, most of the time in the past, they've managed to re-stimulate their economy, but this one might be the pre-bubble or pre-bust stimulus, and if they can get another, you know, 2 or 3 years out of it, then it synchronizes with my 2021, 22 time frame, when you know, we're almost for sure going to hit some real big trouble. Whether it's inflation or whatever, you know, whatever torpedoes the markets, but we're gonna have some, you know, huge problems in the early 20s, and there's a lot of reasons I can't really disclose the main reason for believing that, because it's something that's kind of proprietary. But you know, if you study history long enough, you'll find out that there's many reasons why we will run into trouble. Look, if we get a new president in it's kind of baked in the cake no matter what. If we get a second term with Trump, we'll get a couple of good years, a honeymoon. Once the honeymoon's over, it's diabolical. You know, it's terrible what could happen. It just, remember, listen, the Dow went from 2741, which was an all-time high, down to 1600, 1650. That was a catastrophic. It would be like going from 27,000 down to 16,000 in this Dow, right? Yeah. And that could really happen. In fact, it could be worse. We could go down to 10,000, briefly, and then go all the way back up.
Do you think that dramatic?
I do, because if you go back in history and look at what happened in the 20th century, we remember we had a real major bottom in 07. It was a bit earlier than 09 in the 20th century, in 1907. And we had a similar, upward streak in the second decade. But in about 2021, 22, we took a huge tumble, and we went almost back down and retested that low of 07 rather. Okay, so that would be like retesting 09. I don't think we'll get down to 6,000, but I think we could possibly get down to 10 or maybe 9, and then go back up. And it might happen real quick. It might be a matter of a few days where we spike down and go back up. But that could coincide with gold, hitting 10,000 at the same time. So we get a 1-for-1 ratio. It's happened twice before in history, and it's going to happen again at some point in the future. So monetizing the debt. Remember the big everybody's forgotten about the debt right now, which is going on 260 trillion worldwide. But it's a huge deal, and it's just like Weimar Republic, except it's all the Western countries. This is a global debt, and one day, at some point in the future, the world's going to pay the piper for all this debt. But it could get monetized in the sense that a weaker dollar would, if the dollar gets cut in half, we effectively only owe half the debt of today. And that's a way of overcoming this problem, potentially.
Yeah.
So, yeah, exactly. So kind of a reset. But on the good side, what happened? Remember what happened after the 20s? I mean, the 1920s were pretty rough in the early part of the 20s. Well, no, before that, you got to have a break before the boom. And this is what happened in the early 20s. You had a big shakeout. You had the Weimar Republic, and then the market recovered, and you had this massive rally into the end of the decade. So, and it's quite possible that the 21st century, roaring 20s will be like what was the driving force behind the 20th century boom? There was about 150, 200 auto companies churning out, their prototype cars, and their vision of the future for automobiles. And by the time the Depression happened, there were only a few survivors. By the 30s or 40s, there was only Ford, GM, and Chrysler, and Holden, and a few others. But I think this decade, the next decade, will be flying cars of all kinds of shapes and sizes, and it'll be all the things today that the world needs. Automated driving is always going to be a huge deal in the next decade. And once my view is, once they start coming off the production lines, automated driving vehicles, autonomous driving vehicles. Everybody's going to want one, at least, a large part of the inventory out there, billions of cars, are going to want an upgrade. And Google already has the Waymo package ready to go.
Well, that brings me to a good question, John. I know everybody's been trying to be first to market with this autonomous driving, but is anyone prepared to mass produce?
Well, I think Google has the potential to be the mass producer, but imagine all the service stations around the country, becoming upgrade stations for improving vehicular performance. That's a huge industry in of itself. So this is going to create a lot of jobs and a lot of wealth, and the cars are going to get better and better. And listen, it might not be 100% switch from driver to no driver, but it could be a sort of a staged process. Right now you can buy cars that automatically brake for you, practically speaking. Quite a few of them have this feature, and other enhancements that make that take over, or enhance the reactions of human beings. So there's another big thing coming that I can kind of let you in on. This is breaking news almost. The 5G revolution in cell phones. Remember, look, this is the beauty of Apple. You sort of scratch your head and say, how can this, they still blew away the numbers again. It's continued, even though they're not the biggest phone maker in the world anymore. It looks like they've been overtaken by Huawei out of China and Samsung.
How do you pronounce that?
Huawei, I think it is Huawei. But anyway, they're pretty big in the third world because they're kind of like an Apple clone, but they're a lot cheaper version of Apple. So I guess they're big in India and in Latin America and China itself. So when you're talking about China, the scale is so big that they probably have a small share of the market over in China, but it makes them number 2 in the world. So the next generation of phones that go to 5G are going to be create a lot of obsolescence, so that people are going to have and the way the phones the way the whole thing works these days, for example, with Sprint guaranteeing you the latest model as soon as it comes out, once you've owned the previous model for a year or two.
I hadn't seen it.
No, they've got that. They've got this sort of built-in renewability now, which is just it's just money from heaven for companies like Apple, for the big producers, because they have a guaranteed continuous buying of new phones and the guaranteed upgrade cycle. So going to the 5G, it's such a quantum leap from where we are today. But the biggest benefit from that is 5G potentially, and I think T-Mobile is maybe the leader in this era, has potential to deliver 1 gigabit plus speeds even to your cell phone, which is going to make everybody in the world want this new technology. But better than that, it's going to result in they could potentially take over a lot of the streaming, or take over the business from Dish and satellite-based systems, and really become the provider, the internet provider. They could take a lot of business from the ISPs, because if they're coming in at that speed, they can become, a remote internet service provider. More importantly, there's so many areas in the U.S. that don't get covered. It almost guarantees coverage all over the U.S. and every other country, for that matter.
I've been saying all along that this infrastructure package that Trump talked about when he ran, and he's been working towards, the first thing that should be done before any highways or bridges or anything else, broadband needs to find its way through the rural areas of America.
Yeah.
There are so many jobs available online. People in remote areas of the United States, people who, as they say, live out in the country, you know, people in the Appalachians, they have no job opportunities, they have no learning opportunities, but you bring broadband to these people, they can educate themselves for free in so many cases, and then turn around and find a job. In fact, there's companies out there that will train you for free, you know, and they give you a job and pay you, and you never have to leave your house. I mean,
Yeah.
There's all kinds of scams and letter stuffing, you know, deals out there, but there is a real economy, legitimate jobs. I know someone is very close to me. She works for U-Haul, and she takes inbound calls. For, you know, if you wanted to rent something to move, you know, a trailer or a van or truck, whatever the case, you call and it gets routed to her, and she's working from home or the grocery store or wherever she happens to be. When that phone rings, she answers it. U-Haul, how can I help you? And she, you know, she's not getting rich, but she's doing okay. You know what I'm saying? And so those jobs are out there. But these people that are trapped in these areas, these pockets of poverty in America, get them broadband internet. You know, it's going to take them a couple years to get caught up. You know, all these different things, but that would just make a huge difference in our economy. It would create a really solid base. You know, it would take so many people, I think, if they want to be off of Snap, they could get off of Snap. But so anyway, go ahead. I was kind of agreeing with you when you were talking about the people that can't get a decent internet connection. AOL still, to this day, listen to their next earnings call, the majority of their revenue still comes from dial-up internet.
Yeah, it's amazing.
How is that even possible?
That's amazing. Yeah, but you don't see too many AOL emails these days, actually. But it is kind of amazing. But you know, the thought occurred to me with this new technology. It's sometimes, you know, sometimes the country that invents stuff gets lumbered with the, you know, with the first generation technology, i.e. a lot of, you know, fiber optic cable and a lot of, you know, stuff that's currently the internet backbone, whereas the most logical way to the future is this, you know, wireless. If you can get the speed, if you can deliver the speed wirelessly, it's a gigantic leap forward, because the cost, I mean, you know, it's something like 100 billion for a certain coverage of certain, you know, large part of the country or whatever, versus, you know, 3 or 4 billion to do it, this new, that's going to deliver this 5G. So this 5G is going to be kind of a quantum leap higher, and that probably means that
what is the difference between 5 and 4 speed wise, you know?
I don't know exactly.
Triple, anything like that?
Oh, it's multiples higher, multiples faster, but it promises to be a game changer. It's just like this new president in Mexico saying he wants to get internet to everybody in the country. This might be the, you know, the most efficient way to get it done, because, you know, especially trying to lay new infrastructure in places, in some places, might be very difficult, and they may not even have, you know, electricity in some places, you know. So this is a brilliant idea, and especially for India as well. You know, India is another example of and China, for example. You know, so this is a massive, you know, idea that whose time is coming, and to bring high speed, you know, just bring everything, you know, the high TV, everything that, you know, just in taking the mobile revolution a step further, where you literally have everything in your hand at desktop speeds, you know.
Right. What sort of speed do you have about 300, 200.
No, apparently they can go. They think they can deliver a gigabit. Massive hyperspeed. So and people are going to die for that. Once you start using that kind of speed, you can't go. It's like watching color and going back to black and white.
Yeah, I can imagine black and white.
Yeah.
But there's something to be said for black and white. I had never seen. I was at archive.org where they've got everything that's ever been printed, published, recorded. It seems like is there, available in the public domain. I watched Casablanca on my big screen in my office. I'd never seen it before. I knew what I wanted. I wanted to edit one scene out of it. I had seen that scene before. I wanted to edit that out and put it into a video I was making, and I got caught up in the movie and just kind of sat there and watched it. Pretty cool.
That was a great movie. So, we're definitely in a very powerful look. We're in a powerful up move today. That looks to me that the setup that drove us down from the highs, in other words, the sell signals we got back at the late July that drove us down to this morning's lows, reversed, and they look equal to or greater now than the downward thrust. So given that we're the 2nd of August and we're performing this well, and we've gotten over the eclipse thing and the 4.1 reacted to that, there's a very good chance that we might see this market carry quite a bit higher now going into the the middle of the month at least, and possibly even beyond. So look, what I would warn people is just be sometimes after a move like this, there could be it could run out of gas and reverse. But I think if this holds today and sort of builds on this rally, we're probably going to go up and test the highs. In fact, even the mid cap, which has been rattled here in the last few days, seems to be back on track, and it really looks like all of this was just a kind of a sideways consolidation, and we're probably going to go higher in August. So, and another thing is the Dow, as I mentioned yesterday, there's a chart that is showing that the Dow is pushing up against an uptrend line going back over the last century. If it breaks through that, it could go exponential. And and it really could happen, because I think everybody's underestimating. Look, we've used a very simple formula to predict the growth this year, and believe it or not, the growth is exceeding our predictions. We had a pretty modest, 2, 3, 4, 5, from January to February, January, Q1 to Q2, 3, Q4, Q3, 3, Q3, 4, Q4, 5. That was our model. It looks like we're going to potentially achieve that. We're already at point over for Q2. Really, I think Q3 is going to end at least at 4, and it might push 5. And there's reasons why. We had an all-time record run-up in this. I mean, look, where were we a year ago? We were around. We were just lifting off a year ago in August, right? We were making the lows in August, and we took off in September. Where were we? Around 22,000, and we went to 26,500. We had a 4,500 point rise in 6 months.
Hey, John, I'm going to open up Dr. Tom's mic. He's with us, but before I do, I wanted to pass along a comment to you from Richard. I know you'll appreciate this. Richard says, I believe the winter K wave which is a deflationary wave, has been put off with the Fed's easy monetary policy of nearly zero interest rates for numerous years, will finally unravel with the mountainous debt of the world at some time in the not too distant future. And I don't think it will be pretty. Just food.
Yeah, exactly.
Now, Richard, he's an Elliott wave guy, and he really has a handle on that type of thing. So
right. So you know, if you go 9 months from August last year, you get to sort of May, June, and that's when the economy. That's the second quarter. You know, May, June. So the second quarter is starting to reflect the massive increase in stock prices that started last year, but the real increase didn't come until the fourth quarter, and so that's going to hit in the third quarter and fourth quarter of this year. That potentially could push the growth to 4 or 5%, especially if the dollar breaks. You know, and right now the dollar is really strong still, but if the dollar does break, that'll be a boon to stocks and potentially to growth. But you know, we may get you know, we have to watch these numbers coming out the middle of the month on inflation, because if that's a shocker, I don't think it's going to, it might rattle the markets a bit, but I don't think it's going to derail them, because at this stage of the cycle, getting inflation into the economy actually accelerates growth, believe it or not, because it kind of gets added to the growth numbers. And that could be the surprise, the upside surprise that nobody's factoring in, that could actually hit us in the third and fourth quarters. So, you know, we could potentially get a 1 or 2% addition to the GDP from the inflation factor. So because actually these, you know, increasing export prices is actually, you know, it's still revenue, you know, it's still growth, it's still you know, output from the country.
Yeah, exactly. You were talking about the 5G earlier. Michael P. He shared that 5G will be 1,000 times faster than 4G.
Well, there you go.
Hans says that 5G uses frequencies in the millimeter wave band, and there are possible health concerns that are still unknown, while 4G uses the normal 2.4 gigahertz frequency band. Now, I've got 5G in my office. Is this new machine? I mean, it's got Wi-Fi built into it. And actually, my router puts out a 5G signal. In fact, when I'm in the house and I'm using Wi-Fi on my phone, I'm connected. I can connect to just CFRN, or I can connect to CFRN 5G. You know, if there are health issues, I wasn't aware of it. Oh, wait a minute, hang on. No, that's not 5G. That's 5 gigahertz. Oh, okay, Hans. All right, so I had that. So I'm safe. I don't have to worry about health issues. Hey, Dr. Tom, I opened your mic. Welcome to the show.
Hey, well, thank you. How y'all doing?
John? Yeah, good. Doing good. Doing good. Having a good
Yeah, hi, John.
Hi there, Doctor. Good, thanks. Thanks for us.
Good. Have y'all talked about the fact that Apple became a $1 trillion company?
Not only did we talk about it, we looked at it. Can you see my screen?
Yes, I can.
$100. There's $10,000. There's $1 million. There's $100 million. There's $1 billion. And this, my friend, there's our guy. $1 trillion.
What I thought was interesting about that is,
saw it. Okay.
Number one, that's only the second time in history that any company has ever hit the $1 trillion mark.
Oh, it's time?
No, he's right. He's right. Of course, they didn't tell. Nobody said that today. So, congrats to you for pointing it out.
Yeah, PetroChina. It was PetroChina, and it was like Apple. It was only very briefly, but
yeah, it was kind of an IPO thing, and it kind of got overvalued and then sold off because it happened in 2014, or right about the top when oil was $100, $105, $110. Correct?
Correct. But the two really interesting factoids about Apple are that here's a company, the second one that's ever hit $1 trillion, and it almost went bankrupt in the 1990s.
We were talking about that today earlier on. I mentioned that. Yeah.
Well, I should have gotten on earlier, and the fact that the $1 trillion is bigger than the GDP of all the countries in the world except for 15.
Yeah, correct.
That's wild. A company bigger than 180 or 185 countries in the world.
That's exactly right. Yeah.
So
now, is that 185 combined or?
No, separately.
Okay,
but
right. I'm with you. I'm on the same page.
Yeah.
And to take it started out, well, I don't know. Have either one of you read Steve Jobs' official biography, the one that he commissioned and spent the last few months of his life helping the guy write? I'm trying to think of the guy's name. Walter Isaacson, was that the guy's name that wrote the book?
Yeah.
Now, I have the audio book. It's 27 hours long. And Steve Jobs did an incredible thing. He did not want someone to take his life and paint some pretty rosy picture of this great guy, because he was kind of a despicable human being. I know everyone loves Steve Jobs, and and yes, was a genius, and in so many ways. But bottom line is, he just was not a very nice person, and he made sure that truth got into the book. In the early days of Apple, the other employees would say, "Hey, you need to take a shower," and he's like, "Well, no, I'm a fruitarian. I can't stink." He would come to the office barefoot, important meetings, and they would go like, "No, Steve, really, seriously, you got to take a shower. You smell bad." And he'd like, "It's not possible. All I eat is fruit. I'm a fruitarian." So he went through that phase and other phases. And in one of the interviews, right before he passed, the guy doing the interview said, "What are the 3 most important things you've ever done in your life?" And he said that one of the 3, Steve Jobs said one of the 3 most important things he had done in his life was take LSD.
Wonderful.
I'm not promoting the use of LSD, but if you read any type of science journals, you'll know that it's becoming a very, not for the first time, but there's another wave of tests and research using that particular drug and psilocybin mushrooms to cure a number of things, usually mental health issues or addictions to other types of, to addictive type drugs. So anyway, Steve Jobs, if anyone who's listening to the show, if you've never taken us up on the offer, Audible is a sponsor of the radio show. If you go to audibletrial.com/CFRN, they want to give you a free trial of their audiobook club. You can take a 2-week trial. There's no obligation. They will give you the audiobook of your choice. They've got over 100,000 to choose from. I typically tell my traders to get Trading in the Zone, but for the general audience at large, if you've already got Trading in the Zone and you have not read this book, I didn't read it, I listened to it. I fell asleep listening to it every night for probably 3 months. It is absolutely fascinating. He is not the man you thought he was, and I don't say that in a mean-spirited way, because it was so important to him that people know who he really was. Whether he was proud of it or happy with it, I'm not quite sure, but he wanted to make sure the record was set straight before he left. And so that in and of itself, but it tells the whole story when he and Wozniak first started out. And Wozniak just wanted to build computers and give everything away. He was Mr. Open Source. And Steve's the one who said, "Man, come on, we're going to make money off of this. Lots of money." And Wozniak's like, "Okay, all right." He was he was in it for the technology. Steve was in it for the power, the notoriety, money, and the tech. And he loved elegant, beautiful design. And that was exemplified in the first iPhone that came out. Him and Johnny Isaacs. Okay.
Isn't Audible an Amazon company, Dwayne?
Yes, you're absolutely right.
So you're indirectly sponsored by Amazon. That's pretty cool.
Yeah, that is. I hadn't even thought of it in that way. But, well, that's how Amazon started out as a online bookstore. You know, with big dreams. But that's all they were in the beginning. You could go to their website, you could buy a book, and it would show up in the mail, you know, a week later. Well, they sure turned that thing around.
Yeah. Jeff Bezos ought to appreciate your efforts here.
He should. Dr. Tom, what would you like to talk about?
One thing, can I just say something there? Oh God. Oh yeah, Wozniak's got the highest IQ in the world. Did you know that?
No, I did not.
He's got an IQ of he's got 250 IQ.
250?
Yeah.
Now that's light. Now I have a I'm not gonna give my number out, but I have a pretty good one. But that makes him like, just like with this 5G and the 4G, that makes the difference between his and mine makes him like 1,000 times smarter than me. I mean, when you go up, somebody broke it down for me one time. There's some kind of chart graph study out there. For every 10 points, is it 10?
It's like the Richter scale.
Yeah,
so it's sort of like
that. Yeah, it's phenomenal. So anyway, so John, you gonna hang out with us or?
No, listen, I probably better sign off.
Well,
but thanks very much. Yeah,
okay.
Yeah. I might just listen in and just okay. Thanks.
All right, thanks, John.
Okay.
So, Dr. Tom, how are you today?
I'm doing fine, brother. How you doing?
If I was any better, I'd be twins.
I just had a thought about Mr. Jobs. Since he knew he was dying, maybe what was happening was he was just trying to clear his conscience by fessing up, you know.
Maybe it. I mean,
knowing he's going to meet his maker.
Yeah, I mean, his daughter, Lisa, who he denied for so many years, I mean, he names a computer after her, but I think, as I recall, I think they eventually made things right, or he made things right with her at some point. It was his child, his daughter, but he was no longer with the mother, and so it's like he wanted nothing to do with the daughter. I mean, it was just because, see, in my mind's eye, I thought Steve Jobs was this brilliant, genius, designer, incredibly sophisticated, nice guy. You know, that's who I only knew the on-stage black turtleneck Steve Jobs. I didn't know this other guy that wouldn't take a shower, you know, and lived on fruit and LSD. I didn't know that guy until I listened to that book. And it didn't make me trade in my iPhone for an Android by any stretch. But it's fascinating. I encourage everybody. Now, make sure you get the official Steve Jobs biography. I'm sure other people have written stories about his life at this point, but this was published shortly after his death. If not, I don't think it came out before. It could have. Anyway, go get it. It's a free copy. Now, like I said, it's a free trial at Audible. They want you to join the book club, but there's no obligation. And at the end of the 2 weeks, anytime during the 2 weeks, you can cancel your trial. But the audiobook that you choose to download for free, 100% for free, you pay nothing for it, and it's yours to keep for life. So that's a pretty good deal. Thank you, Audible. And Jeff, give me a call. All right. So where are we today?
Well, listen, if you'd like to try the PowerPoint I have here, just right-click on my name and say Make Presenter.
I know how to make you a presenter, but we've been having display problems now. It's been going on since I got this new display and the new computer, and when I pass it off to someone, it makes it where the people on YouTube can't even see the screen half the time. Is there any way you can just email the slide deck over until I get this fixed?
I could try it. It's kind of large, but we can give it a try.
Yeah, let's give it a try. I'd really, because I don't want to. what you're going to show and talk about, I want people to be able to see it, whether they're watching on YouTube or if they're in the go-to. So you're gonna email it. I'll watch for it to come in, and I'll pop it open, and then I'm sure it will prompt me to. It'll ask me how I want to run it. So it'll take it a few minutes to come over.
No problem.
Sarah sent me an email earlier. Do you know
that was a link to those videos you wanted.
Oh, good. Yeah, I see that now. Okay, perfect.
It's all put together in one string. You're going to love it.
Oh, that's great. Fantastic.
Okay. It's on its way. I'm just going to say PPT in the subject line.
Okay. You sending it to support or?
D Reeves.
Yeah, it all comes to the same place, pretty much.
Okay.
All right, and it should be here because I got one of those really fast internets, so they tell me.
Well, it's still sending from here. Like I said, it's kind of large.
Sending? Okay, it's a big one.
Right. But what we can do, if you'd like, is I can kind of get started on it.
Oh, sure. That sounds good.
And because there's some introductory stuff that's pretty interesting.
Okay.
But it's called the secret currency. And, most people have never heard of it before.
The secret currency. Okay.
That's right. Most people in America have never heard of it. What's neat about it, it's beyond the control of any government. Ours or the European government or any others. But the wealthiest people in the world and their families have used it for generations to build dynasties. They just don't talk about it a lot.
Okay.
Some of the families that have done it are the Rothschilds, the Onassis family, the Hunt family, DuPonts, the Adams family, not the one on the sitcom.
Which Adams? Which Adams are you referring to? The John Quincy Adams? Not
No,
Morticia and what's his
not Morticia. No, the real rich Adams from the 20th century.
I guess I don't know.
The Hopkins family. I had not been familiar with them. Hetty Green and the Farouk family. It was obviously an Arab family, but these folks super rich, and they all have invested in the secret currency. But, and that's the reason I'm here, regular people like us can take advantage of it as well. It's just not that well known.
I'm guessing you're going to tell us what this secret currency is.
Only if you pay me. Now, the secret currency is actually a form of gold, but it's not your typical gold investment. It's like gold, but it's better, a whole lot better, and it has a lot better potential for rewards, which is the main reason I like it. Here's a couple figures. Between 1972 and 1974, it rose 348%. During that same period, the stock market dropped 34%. From 1976 to 1980, it rose 1,195%. And the stock market during that time, for that 4 years, lost 35%. And this is measured by the Dow. From 87 to 89, it rose 665%. And that was a pretty steady rise. And I wish we had the slides. I had a great picture here. The stock market went on a wild roller coaster ride. It's got a picture of a guy in a roller coaster screaming in fear, which is what I do if I get on a roller coaster.
Yeah, I don't do. I'm never tall enough to ride those rides. My son loves to go on a roller coaster, and when we go someplace where there is one, I have to force myself to get on it. I'm not. Yeah, I guess I am a little scared, you know.
Well, I just got tired of having to go to the chiropractor after I went on one, after they whipped my neck around, you know.
You know, the last time he got me on one, I thought about that. The way my neck snapped at one point, I'm like, this cannot be good for people.
No, in my opinion, it's not. At least for me. The last time, you remember the brokerage firm Salomon Brothers?
I do, yes.
The last time they included this vehicle in their annual investment survey, the secret currency ranked #1 for the prior 20-year span. And that was a return of 17.3%, better than any other asset class they measured.
Wow.
So it was a thing. Yeah, it is to me.
Salomon Brothers, that's a blast from the past. When did they go? Is that the 70s? Salomon Brothers, or 80s?
I think they were still in business in the early 90s, but they weren't such a big factor. I was still a stockbroker then, and they were around, but they weren't like the big dog that they had been.
What was the other one? When somebody talks, the world listens. Was that E.F. Hutton?
E.F. Hutton, yeah.
E.F. Hutton, yeah. Okay, they're from the same era.
Yeah, it was actually, when I talked, everybody listened, but E.F. Hutton picked up on it and started using it.
Well, I hope they make things right. I still
Hey, look,
your slides. Did they finish sending yet?
Let me check. I mean, I've got a book in the Bible named after me, so why not, right?
Wow.
It's the Book of Thomas.
The Book of Thomas?
Yeah, it has sent, but it may be too big to come through.
The Book of Thomas is not in the King James version.
It's not in any version, but
there is a Book of Thomas.
Maybe in the Apocrypha.
No, it's when all the big guys got together in the 15th century. Remember when King James rounded everybody up, and some of them chose not to come, and that's always kind of, on a theological standpoint, it's kind of the fact that man decided, what's going to go in. Okay, we're going to put this one in, but we're not going to put this one in. And some of the people that were invited to be a part of this committee that was going to make these decisions for King James, a guy who never showered and was gay, by the way, so just thought I'd throw that in, he didn't bathe. It was not uncommon for people not to bathe in his day. But anyway, he put together this committee of all these bishops and clerics and whoever, and they came, but some turned down the invitation, and during their little convention, they chose what was going to be in the Bible as we know it today. And so that's just mildly disturbing, because I like to think of the divine hand of God, writing it through men, and it is what it is. But there was quite the sorting out process.
Well, as far as I'm concerned, that's always just,
I took it.
It's a joke I've used. I'll quote myself, and they say, "Where's that?" I say, "It's in the Book of First Thomas." But anyway, back to the secret currency.
It's called the Gospel of Thomas. It's from the Gnosis. I'm finding a link to it on gnosis.org. GNOSIS. The Gospel of Thomas. 114 sayings of Jesus that are in the Gospel of Thomas that don't show up other places. And I'll shoot you a link to this. Anyway, you'll find it interesting. Go ahead.
Okay.
The Gospel of Thomas. Go ahead, Thomas.
All right. So basically, what their survey showed that the secret currency was the single most profitable thing you could have done with your money over a 20-year period of time. I always like to look at, longer periods. Most people, when they're looking at investments, they're looking at how they performed over the last 3 to 5 years. But I found it very interesting. So it beat stocks.
Is certainly a good sample size. When someone's trying to build a trading strategy, I agree with my friend Mark Douglas that minimum sample size would be 20 trades to see if what you're working on has, hope of developing into something. And yet I've seen so many people work and work and work on developing some kind of trading methodology, they get stopped out twice and it's back to the drawing board. So your sample size of 20 years on an investment horizon compared to a trading horizon, I think that's, yeah, I think you're on target. I really do.
And the return, double-digit returns. I mean, what gets double-digit returns consistently? 17.3% average annual return. So according to the Chicago Tribune, their analysts beat stocks, bonds, gold, silver, artwork, diamonds, U.S. treasuries, real estate, and oil. So people always ask me at this point, because I teach about this a lot of times at conventions and at the money shows and churches and so on, and they'll say, well, why haven't I heard about it? And I say, well, the more important question is, why didn't your investment advisor tell you about it? And the answer is real simple. The investment advisor can't make money on it, so he's never going to tell you about it, even if he knows that it's more profitable than what he's hawking. It's, you know,
why can't he make a commission on this secret currency?
I'll get to that in just a minute, okay?
Sounds good.
But, you know, you can make hundreds of percent or even thousands of percent with it. And it's possible because of a defect in our financial system that was created by the government itself.
No, not our government. Come on.
Yeah. And this is something I'm really sure about. The reason that we can bank on it is that the Fed has to keep on printing money. It can't stop. It's committed to inflation. So it's going to print as much money as it needs to prevent deflation. I know John's talked about this quite a bit, but this is something I've studied extensively. I hear these talking heads on TV say, you know, well, you know, this move might be deflationary. Well, it might be, but it's never going to cause deflation because it's impossible for our nation at this point to go into deflation. If you understand the way,
meaning that the opposite of inflation, instead of prices going up, prices are going down.
Yeah, but remember, prices are a symptom of inflation. Inflation is actually what the word sounds like. The money supply is being inflated. Okay, so that causes prices to rise, not always immediately, but eventually. That's one of the symptoms. But the way money is inflated, there's a really interesting white paper put up by the St. Louis Fed called Modern Money Mechanics. And in this book, it talks about, they're bragging about how money is created. Most people think that the Fed is creating the money. These days, they only create around 30 to 40%. 60 to 70% is created by you. Have you ever signed a mortgage?
You know, we had a guy in our audience for the longest time, and his name slips my mind. I apologize, but he was a banker. He was in the, I'll just leave it at that. He was a banker for 20, 30 years. That was his career. And he was always trying to explain here on the show, in the chat box, typing into me as we were talking about these things, how money is created. And he never, if you're still out there, I'm so sorry your name slips me for the moment, but let me know you're there. I would love to hear your thoughts on what, you know, Dr. Tom is talking about here, because that's exactly what he said. Go ahead.
Well, it's called fractional reserve banking, and I won't go into it now because I would never finish this up. Okay. But I'll just give you a brief overview of it. And if you like, I've got a whole class I do. I started to call it fractional reserve banking, but the more I learned about it, I changed the title to the evils of fractional reserve banking. But I'll just put it in the shortest version that I can do. Let's say that you take $1,000 and deposit it in Bank A. Okay. According to federal law, that bank can loan $10,000 based on your $1,000. Okay, so I go into Bank A and I borrow $10,000, but I don't like Bank A. Go ahead.
All right. Now, my understanding was that if you deposit $10,000, the bank, and I'm just pulling this number out of the air, but the bank only had to keep, like, if you deposited 10,000, they have to keep 1,000, but they're free to loan out the other 9,000. And that's where the guy in our audience was always telling me that I didn't fully understand it. So,
right, it's in a sense it's the opposite of what you're saying. Okay, they can loan 10,000 based on 1,000. So you got the concept.
I did not know that. Okay.
Yeah, it's scary as heck, because going back to my example, you deposit $1,000 in Bank A, I borrow 10,000 based on that 1,000. That's all they have to have. It's called a fractional reserve.
Now, whoever thought that was a good idea?
Well, it goes all the way back hundreds and hundreds of years ago, but it used to be like a 1-to-1. So like if the goldsmith had an ounce of gold, he could loan 2 ounces of gold out that people had on deposit with him. The goldsmiths were the first bankers because he knew everybody wasn't going to come and get the gold at the same time. But now that they got this 10-to-1, that's where you get bank runs, because no bank has enough money in there. If everybody came and wanted to get their deposits out at the same time, no bank in the world could give them their money.
And nor can the FDIC.
No, they've only got just a small percentage of all their obligations covered. So I don't like Bank A, where you bank. I'll borrow money from them, but I don't like them. So I deposit my $10,000 in Bank B. And here's where the problem begins. If I had just borrowed the money and then deposited it back in Bank A, not a big deal. But I deposit in Bank B, and Bank B makes a loan to Joe for $100,000 based on my $10,000. Okay.
I see how this is getting ugly. Okay.
Yeah. And then Joe's bank can take that $100,000 and leverage it to $1 million loan. So just with 3 hops, we've turned $1,000 into $1 million. And that's actually money creation. So yeah, people think, oh, banks don't make much money. Their interest rate is so small. They make a lot of money. But I asked you that question if you'd ever signed a mortgage. Anybody on this program, if you're upset about the Fed creating money out of thin air, and if you've ever signed a mortgage or if you've ever taken a loan from a bank, you are guilty of creating money from nothing. Okay. So if I go and get a $100,000 mortgage, the bank only has to have $10,000 on deposit, and it can give me $100,000. When I sign for that mortgage and the banker signs it, we have become co-conspirators in creating $90,000 of fake money. Okay, so with that concept in mind, the Fed is committed to inflation because that's the way we've created money. It used to be money was backed by gold, and you couldn't print a dollar unless it was backed by $1 worth of gold. So there were no problems. Right. But now we've created this inflationary spiral, as it's called. So if creating money out of thin air is the way we get inflation, what would be deflationary? They'd have to call all those loans back in, right?
Okay, all right.
The only way you can cause deflation.
Yeah, right. Okay, yeah.
Yeah. So if you want deflation, then you have to pull the money back in, decrease the money supply, which means they'd have to call in the loans, which means our entire economy would crash. So no more is the Fed, have they for years, talked about stopping inflation. They manage inflation. And, you know, most of the Federal Reserve chairmen have never been honest about it. They say, well, you know, we try to keep inflation under control and so on. But Ben Bernanke, who I don't like, but he was at least honest about it. He said, yeah, He said it is in the interest of the federal government to create inflation because it, in effect, lowers the national debt. And John was talking about that when I came online. He was talking about as the money becomes worth less, then the national debt decreases. Okay.
Yeah, he was. Yeah.
So it's in the interest of the government. So therefore, they're committed to keep on printing. They will never allow deflation again. So what happens when the Fed prints more dollars? Well, the dollar becomes worth less and less until it becomes
Worthless.
Worthless. Exactly. Now, what happens to the price of gold when that happens? Well, it takes more dollars to buy the same amount of gold. For instance, at the time I'd written this, the price of gold had risen from $336, okay, that was in like the mid 80s, to a high of $1,900 at that point. That was an increase of 500%.
Okay.
All right. Of course, it's dropped back down from that. But did the value of gold actually go up? Had gold become more valuable? No, the dollar had become less valuable, so it took more dollars to buy the same amount of gold. And it's the same all over the world. It's not just in the United States. Every country in the world now has fake money. When I was speaking in Malaysia, it was a huge church, the largest church in a Christian church in Malaysia. And the pastor had me go out to lunch with his entire board. One of his board members was the president of the largest bank in Malaysia. And he was saying, well, you know, our money, the ringgit, is backed by gold. And all the other guys, about 12 guys on the board, they're all nodding their heads, say, yep. And I said, well, actually, it's not. And they're looking at me like, who are you? You're an American. What do you know about our money? You know, I said, well, I promise you, it is not backed by gold at all, not even fractionally. And so the next day, I brought him back evidence. I went back to my hotel and printed out the evidence. So knowing these facts, what's the best way to buy gold? What way of buying gold has the most upside potential and the lowest downside risk? Because that's what any investor is looking for. I want to make as much as I can, but I want to keep my risk low. Well, here are some things that are not the answer. Gold futures are not the answer. You can trade gold futures and make money with that. But as far as a long-term strategy, gold futures are not it. Gold stocks are not it. People think when they buy a gold stock, it's going to move with the price of gold. Some do, most don't. Some will go up, some gold stocks will go up, while others are going down, because it all depends on what part of the supply chain they're in. Are they in exploration? Are they in mining? Are they in refining? Are they in manufacture? You know, so gold certificates are not the way to go. You know, people buy gold certificates that represent ownership in gold. And, you know, my saying is, if you can't hold it, you don't own it. It doesn't do me any good to have gold in some bank someplace far away from me. I want to have it in my own hot little hand. Gold ETFs are not the way. We've talked about the fact that they try to give everybody the impression that gold ETFs are backed by bullion. They are not. Okay, they're mostly backed.
On the show yesterday, because a member in the audience had asked me which gold ETF I liked, and on the show we discussed whether this was for trading purposes, investment, long term, and it was a longer term kind of thing. I said, you know, I don't trust any of those for long term, and I said what you said. You know, if you can't hold it, you don't really own it. So.
Exactly.
I don't think he's here today. I think that was Gary, maybe. Whoever it was, if you're here today, put a message in the chat box. Go ahead.
Well, if you look at reports, you can get his name off of go to webinar and find out who it was. And the final thing on this slide is not even gold bullion is the way to buy gold. By the way, speaking of slides, did the PowerPoint come in?
No, never did.
Okay, I thought it was kind of too big. All right, so I mentioned that the best way to buy gold was created by a defect in our financial system. It's like a big crack in the foundation. I mentioned a few weeks ago when I was on your program that an ounce of gold sold for $20 an ounce consistently for 200 years, going all the way back to England, and in our country going all the way up to 1933. For 200 years, gold was $20 an ounce. Now, it fluctuated around that, 1990, $20.50, but it stayed right around that $20 mark. And then we had the crime of the century. For the first time in human history, a ruler made it illegal for citizens to own their own money. And you know who that ruler was, right?
Yes.
FDR.
Right.
He was a dirtbag. A lot of people think of him as, the greatest president we've ever had. Obviously, they have not studied history. Now, brokers and economists refer to gold, the gold index, as the fear index. All right. When things get scary, people buy gold. But we know that God has not given us a spirit of fear, but of power and of love and of a sound mind. That's in 2 Timothy 1:7 if you want to look it up and see if I'm telling it to you straight.
No, you're correct. I'm familiar with that.
So I don't believe fear is a good reason to buy gold, but I'm going to give you a rational reason, okay? Because fear is not rational. Here is a rational reason. Gold or money goes where it's treated best. It's just like an old hound dog. If you kick the dog and don't feed him, he's going to go down the street and find somebody that treats him right and gives him a bone every once in a while.
It doesn't kick him, yeah.
Right, exactly. So let's say that banks are paying 17% on CDs. Now that might sound outrageous in an environment like we have now with 1% interest, but I've actually received 70% interest on CDs. So how much interest does gold pay? Well, it doesn't pay any interest. So in this scenario, people who don't know about the secret currency, people who only know about how to buy gold bullion are going to keep their money in the bank, right? Makes sense. 17% interest as opposed to 0% interest, all right? But here's another scenario.
You cut out for just a second.
Okay. Money goes where it's treated best. So if the bank's paying 17% interest and gold paying 0, if people don't know about the secret currency, they're going to keep their money in the bank. Just makes sense.
Yeah.
But here's another scenario. And again, this is a real scenario. Happened not too long ago. If the bank's only paying 0.5% and gold is paying 0%, money flows to gold. Why is that? It's because the government can't print gold. Okay. So why would you put your money at risk at a bank for 0.5% when you keep it safe in gold? Even if you're not making any money, there's not enough profit benefit to you to put your money at risk by having it in US dollars. Because the government can just print more dollars, cause more inflation, make your money worth less. They can't print more gold. And as I've often said, from the time we went off the gold standard, when gold was $20 an ounce and it was worth a $20 bill, today it takes $25 to buy what $1 used to buy back then. So you can see a direct linear relationship between the dollar and gold. As the dollar becomes worth less, gold becomes worth more. So from 1976 to 1980, gold, when I just say gold, I'm talking about bullion, it went up 800%. But this is in a high interest rate environment. So what's up with that? Because what I just said is when interest rates are high, money flows into the banks. into the so-called safe investments. So why would gold go up 800% when interest rates are extremely high? Well, now we get into something that's really interesting. It's called the real interest rate. You can't just look at the short-term interest rate. If you trust that, then you're too trusting, all right? You have to consider inflation. So if interest rates are 2%, but inflation is 5%, what's the real interest rate?
That's a good question.
It's minus 3%. Okay?
Envision. How you arrive at that.
Okay, I'm making 2% of my money, but inflation is eating up 5% of my money.
Okay.
All right. So if interest rates were 5%, I'd be breaking even. That's okay. It's not what I want in my investments, but at least I'm not losing. But if rates are only 2%, and they're not even that high now, okay, they're about 1% on CDs. But this is just the example I have in front of me. And inflation is 5%, then the real interest rate is minus 3%. So whenever you're looking at so-called safe investments, you always have to ask yourself, what's the real interest rate? Right now, the government's telling us that inflation is 3%. In reality, it's probably more like 5, maybe even 6%. But, you know, even with the government stated interest rate or inflation rate of 3%, if you're making 1% on your CD, you're losing 2%. Okay, so here's a real life example. In 1979, short-term interest rates were 8%. That's pretty good. I mean, you don't see it that high very often. But inflation was 13%. So the real interest rate was a negative 5%. Again, just visualize it. Interest rates are 8%, nice interest rate, but inflation was crazy. It was double digits, 13%. So 8 minus 13 is negative 5. Okay.
I'm with you.
So during that time, gold went from $100 to $800 in no time at all, just in a very, very short period. So enter the Fed. I'm old enough to remember Paul Volcker being the chairman of the Fed. Starting in 1980, he actually declared war on gold. He was sick and tired of gold making the dollar look bad, because every time the dollar would drop in purchasing power, gold would go up. And, you know, it makes the government look bad, makes the Treasury look bad, and it certainly makes the Fed look bad. So he actually just drove interest rates through the roof. By 1981, they were up to 15%, and inflation dropped into single digits. So, sounds good, right?
Yeah, it sounds very good.
And bullion did drop, because remember, in the last 100 years, gold bullion has dropped about 10 of those years. Most of the time, 90% of the time, it goes up. But it goes up because the dollar's going down. But in those rare times, like during this time that Paul Volcker manipulated the economy to force interest rates up, then remember what we said earlier about money going where it's traded the best. Interest rates were high, people sold their gold, and they put the money in the bank to make the 15%. But here's the key thing. The secret currency didn't drop. Bullion dropped, but the secret currency, which is a form of gold, did not drop. So today it's deja vu all over again. Interest rates are very close to 0% now. I mean, I've seen some quoted CD rates at 0.5%. The Fed is starting to inch it up a little bit, 1/4 point, and so on.
But yesterday they stood down.
Yeah, they were, the announcement, or not the announcement, the presumption was that they were going to raise, and they didn't. But the way they always try to balance expectations is, like yesterday they didn't raise it, but they said, yeah, but in the next year we're probably going to raise it 1/4 point 3 times. They may or they may not, but at least it keeps everybody from freaking out. But believe me, inflation is rearing its ugly head. Whenever interest rates get down like this, eventually there has to be a rebound effect. what's the saying? Even a dead cat will bounce a little bit, right?
Yeah. That's always the question: is it a dead cat bounce? Some people may not be familiar with that term. You should be. It's an older term, but I assure you that no cats were harmed in the production of this radio program.
I'm glad you made that clear. So
last thing I need is PETA knocking on my front door.
Yeah.
Ethical treatment of animals. Well, I'm all for that too. I'm just not a nut like they are, throwing blood on people because they're wearing a fur coat. So.
Yeah. So it's gold time, folks, and fear is not driving the rush to gold. It's a rational move for all the reasons I was just talking about. But you need to buy the right kind of gold. You need to buy the secret currency, which is investment grade gold. And I'll end it there just by saying that investment grade gold is rare coins that are in excellent condition. They're old coins, and on average, over the last 40 years, they've outperformed bullion by 700%. So
700%.
Yep. 7 times better than bullion.
Now I told you that I when we first met, I told you that I would be the guy to throw you the softball questions when we do radio shows, and it probably makes it a little uncomfortable, but I just, my audience has been with me since 2005. I kind of owe it to them, and plus I'm curious myself. I almost feel like there's a hint of the people who purchase and collect's not the right word. People who purchase investment grade gold.
They're actually investing in it, yeah.
Yeah, investing in good investment grade gold. Are they not the same people who are establishing the value and the worth of? I mean, it's worth that because these guys over here, the pipe smokers. I had a boss when I was real young, in my 20s. He called them, and today that image perfectly comes to mind. The guy with the cardigan and the pipe, and he's sitting at a desk, and there's the bookshelf behind him is all full of books, and he's very, very smart, and he talks down to everyone, and he knows everything. So, when you tell me that it gained how much percent?
It went up 7 times more than bullion did.
Okay. And so who determines that? How is that value determined? By the last sale? I mean, with a stock, a stock is worth whatever the last time somebody hit the bid or the ask, that's what that stock. So, and I'm not trying to intentionally throw you a hardball question. I want to know, and I know that I've got very smart people in the audience. I know they want to know.
Well, sure. I would want to know, and I asked those very same questions when I started buying investment grade gold myself, because I'd been a gold owner for years. I mean, from the time I was in my 20s. But I realized, I at one point I'd bought $250,000 worth of gold at $200 an ounce. That gives you an idea how old I am. And by 1980, gold was at $800 an ounce. And so I'd made 4 times my money, right?
Right.
I was a millionaire.
Sure. Good for you.
But it didn't really mean anything. And I didn't know it at the time because I didn't understand inflation. It was only after I retired from the brokerage business and I really started studying inflation and the national debt and so on that I realized that $1 million would only buy me the same amount of junk as $250,000 would have bought me. So I basically wasted my time being in gold. Okay. It went up 4 times in value or in price, but it didn't go up 4 times in value. So in investing, they call that an opportunity loss. It'd be like if you buy a stock for $50, hold it for 20 years, and it's still $50. You know,
Right.
so the price of investment grade gold is created by the market in the same way as you mentioned stocks. A more relatable comparison would be real estate, because real estate tends to be like gold. It's a hard asset, so it goes up as the dollar goes down. Whereas, well, I gave this example before, but I'm sure not all the same people are on the line. 100 years ago, a house cost $4,000, and so gold was $20 an ounce. It actually had it printed on a 1 ounce gold coin, U.S. gold coin, $20. And so the house was bought for 200 ounces of gold. Today, that same house is worth about $250,000, and 200 ounces of gold is worth $250,000. All right. So the house didn't go up in value. It's still a 3-bedroom, 2-bath house. It still protects you from the elements.
Right.
And the gold didn't go up in value. I mean, because gold's worth what gold will buy. It bought a house back 100 years ago, and it buys a house today. But if you put that same $4,000 in the stock market, which is much more susceptible to inflation, it only rose to $83,000. So it didn't even come close to keeping up with inflation. But if you put the same money in investment grade gold, it rose to $2 million. So in that case, about 8 times as much.
That's significant.
So the market determines the price. I mean, if people think that this house is a really desirable house and it's a good neighborhood with good schools and a church down the road and all the reasons why people buy a house, they're willing to pay more for it. So the market determines the price. If somebody really wants this particular rare coin and they have to have it because they know how much those kinds of coins have gone up in the past, then maybe they pay more for it. If it's not as desirable a coin, maybe it's got some scratches, then they pay less. So it's like anything else. It's like antiques, it's like rare paintings. Why is a Monet worth, my daughter's a good artist. She draws Sonic the Hedgehog cartoon. Great, does a great job of it.
Right.
But why is a Monet painting worth more than Sarah's Sonic the Hedgehog?
Because everyone's agreed.
Yeah. Yeah, everybody thinks Monet's a great painter. I think Sarah's more talented than he is personally, but I'm prejudiced. I'm her father. Right. But most people know a lot more about art than I do, say Monet's the dude, right? And so if you find a Monet in great condition, then it's worth a lot of money. There was a Babe Ruth baseball card that sold not too long ago for $500,000. Now that's just plain ignorant, okay? Because that baseball card, you got it free with a 3-cent pack of bubble gum, right, decades ago. So why in the world is it worth $500,000? Well, it's a piece of cardboard. It's got printing on it, but it's in great shape, and it's the only one that exists today that's in that good a condition. And so the market says it's worth $500,000. The interesting thing is that collectibles have never experienced the big drops that other investments have. I mean, like 1 out of every 3 years, the stock market goes down. Usually it's small corrections, 10, 20%, but we've seen a lot bigger corrections than that, right?
Sure we have.
So that's why, you know, I mean, I'm more of a trader when it comes to stocks. I do not buy and hold. When I first became a stockbroker, that's what they trained us to tell our clients to do. But as I watched the results, it didn't work. It really didn't. Just buy and hold a few stocks. Like if you bought Apple or McDonald's when they first came out and just held them, you could have made a career out of that and never done anything else. But by and large, if you have a diversified stock portfolio and you just buy and hold it for decades, you don't make money when you adjust for inflation. And if you're looking at an index, you have to adjust for something else. For instance, the S&P 500 is not anywhere near what it used to be, right? As far as the names of the stocks, if you look at a list, the majority of the stocks have turned over. They pulled them out, put new ones in. When Government Motors, for instance, was taken over, General Motors was taken over by the government, I think the last time it traded was 17 cents. And it was in both the Dow and the S&P 500. So they pulled it out and they put a profitable stock in its place. And both the indices went up, but it's artificial.
Okay. So how does someone get started with investment grade gold? Now, it's up on the screen, guys, CFRNgold.com.
Okay.
How does someone who understands the language that you're speaking, what should they be doing right now? What should they be thinking? What should they be plotting and planning?
Well, as soon as your program's over, they should go to CFRNgold.com and ask for the Gold Education Starter Package. That includes some videos. It's got a couple of very short ones. I think there's a 1-minute overview and a 12-minute introduction. Kind of just get your feet wet. And then there's a couple of articles there that I would recommend that everybody read. One is called Golden Art, and it talks about the history of investment grade coins and how they became, you know, one of the most valued assets that, like I say, almost every wealthy family in the world has. But you don't have to be wealthy to have them. There are investment grade coins at all different levels for every pocketbook. The other one that I'd strongly suggest you read is the 10-10-10 Financial Survival Plan. I've had that reviewed by some of the most respected Christian economists in the country, and they say it's the best asset allocation plan they've seen for precious metals. So that's what it boils down to. It's how to survive a crash. Now, are we going to have a crash? I don't know. An awful lot of people say we are. If I had to guess one way or the other, I would say yes, but I don't know that we are. But I do know this: I'm prepared if we do, because I have my precious metals money allocated according to the 10-10-10 plan. I won't go into that. Maybe sometime on the program we can explain the 10-10-10.
Yeah,
but
I'd like to get into that.
but it's only a 4-page article, so you know, get the Gold Starter Pack and read it. And then if you have any questions, you can contact me. You'll get an email that has my contact information. And also, every Monday night we do webinars, and we teach all different aspects of financing, everything from how to beat inflation to real estate to insurance. I mean, I have some of the best experts on all these different areas that come on the Monday night webinars. It's kind of like this program in a sense. Dwayne has a lot of people a lot smarter than me come on this program, and well, you got to be humble.
There you go.
Well, you know, I don't know if I ever told you this, Dwayne, but the first church I pastored actually gave me a plaque for humility because I was just so humble, you know. Pastor Tom Barrett, the most humble guy in town, you know. But then they took it away because I hung it on the wall.
They hung it on the wall?
They took the plaque back because I hung it on the wall.
I get it. All right.
All right.
Good for you. I get it.
So,
all right, guys, you heard it. CFRNgold.com, the secret currency. Find out more. Find out how you can put it to work for you now, before you're gripped by fear.
amen.
We'll see you again next Thursday.
Okay, I'm looking forward to it.
All right. Thanks so much, Dr. Tom. Guys,
goodbye, everyone. God bless.
CFRNgold.com. Get that starter kit, get the information so that we can all be on the same page next Thursday. Thanks, Dr. Tom. We appreciate you, and we'll talk to you next week. All right, guys, we're going to wrap this up as the hour has grown late. Let me take care of Dr. Tom's microphone. CFRN Gold, all one word, .com. CFRNgold.com. You hear the sounds of hoofbeats as everyone races off. You're supposed to do that after the show, but this is almost after the show because I got to get up and I got to go. Let's run through a couple things real quick, like S&P 500 Emini Futures. Last night, the Concierge Trade Alerts said to consider selling 2801. We dropped 10 points, $50 per point, $500 per contract traded. However, you did not get out with 10 points. No one did. Now, someone may have stumbled into it. I don't know. When you trail a stop, you're always going to leave a little something on the table. Okay? And often if you trade to a fixed target, a hard target, like 27.96 here, the zone, you left some on the table because price went below 96. So, out of the 10 points, out of the $500 per contract that the market made available right here, what you were able to take out of that move is based entirely upon where you've trailed your stop to. Period. And the email last night said, if the opportunity presents, consider buying 28.19. The swing high so far, 28.75. Oh, that number sounds familiar. That was the previous swing high of the week. Oh, no, 28.27.75. Okay. Thought it sounded familiar. All right, so from 19, what do we got here? We hit 20, we'll call it 28. So from 19 to 20, we'll call it 9. How about that? 9 points. So 10 down here, 9 up here so far. At $50 per point, that's $450 per contract traded. Okay? If you got out at the exact swing high, and you did not. Nor did I, nor did anyone else. Okay. On the Dow, last night's email said to consider selling 25,300. Okay. This is when the alerts came out. Sell 300. We dropped 200 points at $5 per point. That works out to be $1,000 per contract. Your results are based upon where you trailed your stop to. We also said on the Dow, the opportunity presents to consider being long 25,375. Haven't got there yet, but I'll tell you what, the way this thing's moving, 375 is up here. So on the Russell, consider selling 1656. No trigger. Consider buying 1682, and so far we've only made it up as far as 85. That's 3 points at $50 a point. Crude oil. Last night's email said to consider selling 67.20. Dropped $250 into last week's weekly trading zone. All the rest of these are this week. $250 per contract. And in the same email, we said if the opportunity presents, if we get a rally, if this thing can turn itself around, consider buying 68.15. That's another $1,000 per contract available. Bonds, we had a 6-tick move at 31.25 per tick, and head, shoulder, shoulder. We'll be looking for a sell-off, a break of the neckline in bonds this afternoon into the evening. The NQ, talk about double-sided action. My goodness. We said to consider selling the NQ at 72.74. Dropped $1,000 per contract. We also said if the opportunity presents, consider buying 73.09. Now this was $1,000. From 73.09 to 73.59. It's 50 points at $20 a point. It's $1,000 per contract. Now the swing high up here, 73.85. Hell, we'll just add it. We'll call it another 20 points. We got from 60 to 80. Yeah, just another 20. So about $1,400. A little over. $1,400 per contract available. Okay. And I haven't put any of the zones on this chart for you guys yet. It's Thursday, so today's the day. Let's see. What do we have? Okay. 72.25/26. I'm just going to do one. 72.25/26. These are the zones the partners got Monday morning, 6:15 a.m. Eastern, as they have since December 2009. 72.25/26. Then above that, we had 73.43, and the market ripped right through it like it wasn't even there. Now, I say that to point this out. It's 73.43/44. When price rips through a zone like it isn't even there, we call that a hot knife through butter because you got no better term for it. What will typically happen is price will come back to the zone. It will retrace to the zone it sliced through and then continue in the direction of the slice. So there is a good possibility, if not a high probability, that when we come back tomorrow, this chart could look something like that. Gold, all gold. You no longer crack me up. Last night on gold, we said to consider selling 12.24. Here's 12.24. Okay, so the first time we poked through it, we got down to $21. So that's $230 per contract. Important prices, important areas are almost always tested. We get back above the trigger, confirm that the zone is going to be good resistance. This time we drop to 12.20, so That's $400 per contract available, and it's still falling. Soybeans. We said to consider selling 890. Oh, you know what? I left a digit out. It's missing. Oh, anybody that wants a want to take a screenshot, you'll see where I made the mistake on soybeans. Let's go ahead and snap a shot. If you're using the GoTo software, the little thing that looks like a camera up top, it is. Just click it and it'll save an image to your desktop. See, on soybeans, I left the digit out. So I know what the digit was, but I didn't publish it, so I'm not going to talk about it. All right. Now, today's Thursday. Tonight, Partners Workshop every Thursday night, 9 p.m. Eastern. Partners, see you there. If you're on the trial, to get into the workshop, you need to become a partner. Okay? Very important. Take care of that so you can be in the meeting with us tonight. Good things develop there. All right? And it'll be a real bonus to you as you're getting started on this journey. We look forward to seeing you there. Today and tomorrow are the last 2 days of the beta test. Of course, markets close tomorrow afternoon for the weekend. Futures open Sunday night, 6 p.m. Eastern, and with just a little break each day, they continue trading around the clock till Friday afternoon at 5 p.m. Eastern. So at 5 p.m. Eastern tomorrow, the beta officially ends. I know I have some recap stuff to catch up on. I also need to get some trades out this afternoon and tonight and into tomorrow. You've missed a glorious 3 weeks. God blessed us. But it's all recorded, so you can go and see every single trade, everything that happened, all of it. It's all there. And I'll do my best to get caught up on the recaps. If you want to participate in the last day and tomorrow, if you want to review what we've done over the past 3 weeks, here's what you do. Send an email to support@cfrn.net with beta in the subject line. That's it. Just send an email to support@cfrn.net. The subject line, put the word beta, B-E-T-A. The autoresponder should kick you out an email that has a link which will get you into our private Telegram channel. If you're not familiar with Telegram, you need help getting it set up, either let me know or just go to telegram.org, and the documentation is plentiful. It's simple. It'll walk you through it in no time at all. You'll be in our private Telegram channel, and you'll be reviewing all that data from the past 2.5, now almost 3 weeks. Now, in the chat box, what have I got here? David, it's cfrngold.com. Han, what you heard said to you about the Gospel of Thomas was not entirely accurate. You may want to Google why were some Gospels not in the Bible. Articles such as well, it wasn't something that was said to me so much, Han, as it was the research I did. So now, certainly sounds like you know what you're talking about, so I don't want to dispute. I'm going to share that link you gave us with the rest of the audience. This is what I know. At that 15th century convention that King James called, not everybody showed up that he invited, which kind of bugged him a little bit. And then they sat around and decided what was going in and what they were keeping out. And the Gospel of Thomas just happens to be one that was under the impression they kept out. So let me hit send to all. And I will myself take a look at that that link. I just put it in the chat box. There you go. So I'll go look at that, and I encourage everyone else to go take a look at it as well. And then once I'm on the same page as you, once I have the same information as you, then we can talk about it again tomorrow. Okay? All right. Guys, thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.